Hi, it's the 31st of July 2018 and welcome to our monthly tax webcast. We will start today's webcast by looking at the most important developments in the local tax legislation. On the 10th of July, the new legislation that regulates the funds industry in Cyprus was approved by Parliament. Although the laws have not yet been published in the official gazette, the laws voted by Parliament provide for the following. Individuals who are on a performance-based remuneration and non-Cyprus resident prior to their employment in Cyprus may choose to be taxed on such remuneration at a flat rate of 8% as opposed to the normal tax rates with a minimum tax payable of 10,000 euros per annum. This favorable method of taxation is available for the first 10 years and is subject to certain conditions. No permanent establishment is created in Cyprus where a non-resident invests in a Cyprus tax transparent investment fund or where a non-Cyprus investment fund is managed from Cyprus. Compartments of an alternative investment fund, although legally not separate entities for tax purposes, these are treated as separate taxable persons. And lastly, a change that affects only Cyprus tax residents and domiciled individuals. Dividends deemed to be received by such individuals from UCITS or AIFs are subject to special defense contribution at the rate of 17% instead of the favorable 3% rate that applied before. On the 17th of July, the amending laws with regards to bank loan restructurings were published in the official gazette. The relevant tax laws that were amended are the income tax law, the Special Contribution for Defense Law, the Capital Gains Tax Law, the Stamp Duty Law, and the Lands and Surveys Department Law. The amendments extend the scope of the tax-free loan restructurings to include transfers to third parties that are not related to the borrower in case where the proceeds are used for the repayment of a loan which was non-performing as at or before the 31st of December 2015. In addition, the term qualifying lender is amended to include, besides credit institutions, credit acquiring companies and their subsidiaries, as well as licensed public bodies and companies holding non-performing debts. It is finally provided that where the proceeds from the sale of immovable property are higher than the amount required for the repayment of the loan, the excess amount will be taxable in the hands of the borrower. It is important to note that no changes were made to the VAT law, and unfortunately, VAT issues do arise. We understand that the Ministry is looking into this, and it is expected that the relevant changes so as to exempt such transfers from VAT will be proposed. Lastly, on the local developments, on the 24th of July 2018, an announcement was issued by the Tax Department which clarifies that the first installment for the provisional tax for the year 2018 can only be paid electronically via JCC Smart up to 31 of August 2018 without interest and penalties. The provisional tax declaration for 2018 would effectively be done together with the payment without the need to submit a manual provisional tax declaration form. The manual forms should only be completed and submitted to the Tax Department when a revised provisional tax return is submitted and when no tax payable arises due to overseas tax credits. Moving on to international developments, the Russian tax authorities have recently issued a letter which provides guidance to tax inspectors on the application of the beneficial ownership concept. This concept requires foreign companies seeking benefits under a bilateral tax treaty to provide the payer of the income with documentation which establishes that the company meets Russia's beneficial ownership requirements. The new guidance significantly increases requirements for foreign recipients of Russian source income to qualify as beneficial owners eligible for tax treaty benefits. We understand that this was an anti-avoidance measure. However, it may affect many proper holding companies with the increase in substance requirements and extensive disclosures. Potentially affected parties should review their setup in Cyprus and consider whether actions may be needed to mitigate potential tax disputes. We will close off today's tax update with a brief reminder of the upcoming deadlines. 1st of August is the due date for payment of the 2017 tax balance through self-assessment by individuals and companies preparing audited financial statements. As with other due dates, interest and penalties do not arise if the tax is paid by the end of the relevant month, and in this case, 31st of August. 31st of August is also the deadline for the payment of the second installment of the premium tax for insurance companies. And finally, 31st of August is the deadline for the payment of the first installment of the 2018 provisional tax through JCC Smart without interest and penalties. This concludes our tax update for this month. August is typically a holiday month here in Cyprus, with temperatures reaching the upper 30s and in many occasions mid-40s. So we will take a short break from our webcast series and we will see you again in September. Thank you for watching and enjoy the rest of your summer holiday.